Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have an amazing guest for you today. I should restate that, a repeat guest. He kills it every time he's on the show. He's appeared multiple times. He's some of the most listened to episodes. He's a technology expert. He's one of the best networkers I know in the industry. We've sat on many boards together, but more importantly than anything, he's just an all-around great person. There's no one in the industry I'd rather break some bread with and have a meal with. Please help me welcome Eric Kujala, VP of Product Marketing at ICE Mortgage Technology. Eric, welcome back to the show.
It's always a pleasure, Mike. I appreciate it. I really need to work on setting that bar a lot lower. I need to It's great to be on again, though. I appreciate it. It's great to be on.
Well, it is great to have you. It was wonderful to see you in Las Vegas for the ICE Technology Conference. I have been to dozens upon dozens, if not hundreds of conferences in all of my years, and I have to say that was one of the best conferences I've ever been to.
Well, that's great.
First class all the way around, from the level of the speakers to the breakout sessions. So for those people who unfortunately didn't get to go to Las Vegas a couple weeks ago, what are some of the key takeaways you took from the conference? What were some of the things that the lenders were talking about? And let's dive into some of the key takeaways.
Yeah, it was interesting. I mean, I don't think any of these are really big surprises, right? There's never any real big gotcha moments there, but there was a few things that we want to put some focus on, right? We all understand we're now getting away from a refinance market and transitioning, if not, I shouldn't say even transitioning, we're kind of already in it, into that kind of purchase market, right? So you remember these years, 5, 6, 7 years ago, it was all about point of sale, then refinance kind of kicked in, then no one had enough time to do anything else, so they focused on that, and they were worried about capacity. Well, now they've got kind of the opposite problem, right, is trying to understand how to go out and attract borrowers and kind of win borrowers and kind of improve that overall experience to kind of feed that pipeline, right? Because it's going to be, depending on what report you look at, 2-point-something trillion in 2022-ish, somewhere around there.
Right, yeah, I mean, most economists, people far smarter than me, are saying, refis will probably dry up 50 to 60%, but purchases are going to increase by close to 30%.
That's right. And it's interesting. So I don't know if you had a chance to catch it, but Joe Tyrrell's been kind of talking about this 1% improvement, right? If you focus on just improving 1% per day. And it was kind of he kind of related to, obviously to the industry as well, right? So it's kind of like, if we can do just one more loan per lender per day, we help bridge that gap, right? Kind of between what those originate. So the question is, how do you go out and go do it and focus on that kind of incremental growth than you can trying to go into? And a lot of it was, if you tap into different equity sources, like there was some talks about, the home equity line of credit business, what that looks like. Now, it's interesting because, that's typically been a banking kind of, product, right? On the banking side. We're starting to see more of the larger independent mortgage bankers that have servicing portfolios start to attract and tie into that. So there's even that kind of conversation going on as well, which is interesting. So,
well, and I think, you mentioned Joe's presentation. I think he does an incredible job of being very relatable and tying what's going on in his life, what we are all dealing with in the pandemic, to how we can all get to that 1% improvement. And as you mentioned, whether it's that lender getting one more loan, whether it's that loan officer getting one more transaction, or even as individuals, 1% better in your marriage, in your personal life, in your relationship with your kids. So I loved his presentation. Let's talk about some of the tech that were on display, right? You had over 400 vendors, I believe, that were there. That's one of the largest shows in the industry as you look at. And you guys are challenged to really serve a lot of different audiences. You have all of your lender clients that are coming as a client conference to learn and be educated. You have a number of executives from these mortgage companies that want a lot of that strategic thinking. Hey, where's the next thing going? What are we doing about equity? Where's that thing on the next horizon 2-5 years out? And then you have over 400 vendors. What are some of the solutions? What's some of the tech that kind of jumped out at you that people were talking about the most?
Yeah, it's really kind of interesting. You bring up a really good point. We've always We've obviously had a partner network for a long time, but it's really grown over the last, several years, right? And to support all of those different kind of transactions, some of them have, competitive offerings that might be something that we build, right? But we are okay with that and want to be okay with that because we understand that we can't be everything to everybody, right? But if we can help foster these relationships and build these integrations and monitor them and keep them up to date and understand what the changes are and so on, it becomes a more seamless type experience. So lenders have kind of options. So the technology things that we've seen kind of pop up as of late are still the aggregators are big ones, right? The asset aggregators, the income aggregators, those guys seem to be big. I'm going to lump them into a general term, which I'm sure everyone in the world will hate me for saying this, but kind of that underwriting automation kind of technology, right? Which is a very broad kind of statement, right? ICE Mortgage Technology, we've got the AIQ Analyzer side of the house, right? Then you've got the Candors and Softworks AIs and the gateless type folks that are out there as well, kind of pinpointing these different kind of point solutions at different aspects of underwriting. So there's a lot of that just to I think people are still concerned about capacity because, we all know this, it goes in cycles, right? So if they invest now and understand some of those automation keys, those automation pieces, although very process-oriented, right, and kind of manufacturing-oriented, if you can speed up that process, that helps your front end, right? That kind of, it taps into your front end experience as well, kind of speed through that market. So we've seen a lot of focus on that with kind of the couple big highlights that we saw, so.
Well, I think that is such an important part, and I think there's one other component of it that I'm hearing a lot of when people are looking at, I'll use your terms so people get mad at you and not me, these underwriting solutions, right? They're not just looking, a year, 2 years ago, 3 years ago, it was really how do I handle more capacity? And that's why I need these solutions, and I can't hire another underwriter, and it's costing me $150K to bring on another underwriter, and I got to give them a $50K signing bonus. But what I'm seeing is as the market shifts and there's more margin compression, people are looking at how do I streamline so that I can be more cost effective. And some of these underwriting automation tools people are using to kind of almost thwart off some of that price compression.
That's right.
Addition to your point, which I think is absolutely critical, how do we make it a better experience, right?
Yeah.
If it's not a better experience, did you really give it your best? As a lender, if it's just another transaction in this market, you're going to lose a lot of opportunities for people that are going to say, hey, you know what? I had a much better experience with so-and-so.
Yeah.
I'm going to refer to my families and friends, and I'm going to go that route.
Yep.
Let's talk a little bit about AI. You and I saw you in one of the sessions, and there was some great discussions on artificial intelligence, and I think that's still somewhat of a buzzword in the industry. Is it machine learning? Is it artificial intelligence? But
that's right.
Tell me some of your takeaways from and some of the things that people really discussed or were gravitating to on that topic.
Yeah, well, this is kind of an interesting, kind of conversation, right? I don't know if you had a chance to sit in on that session, but Courtney Dunn, Brian Stuckey from Rocket Central, and oh my gosh, why can't I remember? Courtney, Brian, and Chris McEntee. That was from our own ICE Mortgage Technology group. Kind of had this conversation around artificial intelligence, and the reality is we're still very in its infancy, kind of in the mortgage space, right? We're not really making underwriting decisions using artificial intelligence yet, right?
Right.
But there's a lot of talk in DC about how they're going to regulate this, right? Because it could if designed the wrong way or taught the wrong way, or whether it be direct or inadvertently or whatever the case is, it's going to could cause some potential downstream kind of effect, or the other way, right? If done correctly and done the right way, it starts to alleviate and remove a lot of that risk that we've had inherently before. So there's a lot of conversation about what that actually looks like, and I think you just need to be very active in the conversations. That was kind of one of the big asks that we had, is be a participant in these conversations. We're still using it to predominantly learn documents and extract data from them, and then kind of normalize that information to make those associations, right? This is Michael Hammond's pay stub versus Eric Cuyelo's pay stub, right? Kind of those types of associations and things. So, but again, we eventually want to get there and start making decisions around that information. Right now they're programmatic, but eventually they kind of go that way. And we just need to make sure that we're active in those conversations. So when DC starts to come down with stuff, we can have our influence, our say in kind of how it gets dictated and stuff. So it's kind of an interesting conversation, but it's definitely heating up for sure.
I would agree. And there's so many different issues that can come into play. The safeguards, is there unintended biases that are put into some of those algorithms and everything? And then I think there's also a very practical aspect of where can we start using some AI components now? And how do we not overcomplicate it and try to make AI bigger than it needs to be right now? I mean, the example I always use is a Christmas or two ago, I got a toothbrush that has AI. I love it. And I when I brush, it's got this little app and it can tell me if I brushed long enough on each tooth and what side of the mouth. To me, that's just a simple example of, hey, if I can brush better every day of the year with that, am I going to have far less problems with that? And that was just a simple little application of AI. So
there's your 1% improvement, Michael. You just
exactly. So at least these chompers will be on for another year or so, and we'll get that 1%.
That's right.
I think one of the other things, though, that has driven so much of this discussion about AI and machine learning is really all about data.
Yep. That's right.
People are now starting to understand, I've got to better use my data. How can I leverage it? How can I find more borrowers? How can I make sure I'm doing certain things? So give me kind of your take. We've been on panels. We've been on focus groups. Give me your take on data. I mean, there's so much talk about it, but where do you see it best being used, and where do you still see that we have room to grow?
Yeah. I mean, I think it's an interesting conversation. It's just kind of, we could probably spend a whole time just talking about this one. So, I mean, the data that this industry gets comes in all forms, shapes, and sizes, right? And people are like, oh, well, I'm just getting it from the asset aggregator, or I'm getting it from the income aggregator, or I'm getting it from another third party. I can't think of an appraisal company, right? An AMC or something like that, right? And that's great. That's all structured data kind of comes in and so on. But you may not have that all the time. Right? You may do it, and people are going to laugh because I use this example all the time, but you go and get a mortgage from my dad, he's not going to let you go pull his bank statements. He's just not. It's just not going to happen, right? So he's going to hand you, a stack of paperwork, and you're going to have to go kind of figure it out. And that's where it gets that, I call it the dreaded print button, right? Converting something that's the data element into a piece of paper, which then kind of,
cuts off that whole data stream.
Yeah, exactly. And it's just kind of funny because, but that's the demographic of borrowers that you're going to be dealing with, right? Is that you got to be able to take all those things in. So to me, the data portion is, understanding where they're coming in from, right? Why they're coming in that way, converting as much as you can to those kind of structured data sets versus kind of the non-structured data sets as often as you can. And then it's a question of, okay, what do I do with it once I have it, right? And even that's in a comment, and I use like really stupid examples when I'm talking to customers and things like that, is like, think about if you're on the correspondent side of things, right? And you're buying a loan from Michael Hammond's Totally Awesome Mortgage Company, right? Michael Hammond's Totally Awesome Mortgage Company is going to send me 500 pieces of paper and a data file from my LOS, right? Well, I got to make sure those things jive up, right? Well, Michael Hammond had a bad day that day. Sorry, Mike, I'm going to pick on you if you don't mind. And interjected like 4 other loans in that package, right? Well, now you've got like 4 1003s inside. Now, does it happen very often? No. Does a similar example happen? Probably, right? But how do you decipher that and take that stuff? And you got to build those types of analysis tools to kind of slice and dice it, right? And that's just kind of on the correspondent side. Same thing happens on the retail and wholesale side, right? It's like I'm doing a loan with my wife. She's got a bank statement over here. I've got one over here. They don't need hers, they need mine, but I send hers instead. So how do I, it's just that deciphering of kind of what comes in and how to make sure you've got it right is kind of the real key part, right? I mean, once you have it and understand those nuances, right, and what to do with that information, that's where you can start to really kind of leverage it, right? But until you know like what's actually coming in the door and why and how often. And then you've got timing events, like I've got a pay stub that came in today, and then I've got another one that comes in tomorrow, and another one that comes in the 4th day. How do you tie those 3 submissions together and so on? So finiting that process, understanding how it comes in, that's how you can really start to use it. And then you start talking about, do I do it to mine more data for my customers? Do I do it to optimize my process? Do I do it to improve my secondary execution? Whatever those things might be.
Right.
You got to understand what comes in the door. So,
Well, and like you said, somebody's got to own that data and somebody's got to know what you have, how to use it before you can make it meaningful. There's even, as we talk about, as the shift from refi to purchases, people are looking at how do I make more transactions and how do I find more borrowers. If they mine their data correctly, everyone has what somebody's rate is, right? I mean, the mortgage company has that. So you could easily say, hey, you know what? I can still get you in a better mortgage, or I can get you in a better term, or I can help you consolidate debt and put you in a much better financial position.
Yep.
It takes data. I see a lot more data scientists being hired, not just on the tech side, but also on the lender side.
That's right.
Because while all of this data has been there for years, what I'm starting to see now is it's starting to become more accessible for people to use, right? I mean, the example I always give, and now I'm dating myself, but I'll do it. You know, I had a Trio 600, mobile phone, and the first MP3s that I wanted to play on my thing, everyone's like, oh, they're all out. I couldn't figure out how to freaking download them at all. So even though I could handle this device could do it all, I didn't know how the hell to use it. And then what happens one Christmas, Steve Jobs comes into my life and I get an iPod. And within 2 minutes, I'm downloading dozens of songs from college. I'm laughing at how easy it is. And wow, what a great user experience. So it's not just the technology. It's not just the data.
You have to understand
people providing the tools and the ability to easily access and use this data that I think is going to have the most profound impact this year and the years to come.
That's right. And I think it even becomes more important as we go through this kind of transition in the purchase market. And Garth Graham, I'm going to use him as an example. I mentioned it last week in a different podcast as well, but he kind of talked about the refinance market being transactional, right? Very linear in process for the most part. But, a purchase transaction is very episodic, right? There's you have a hurry up and go get pre-approved, and then potentially wait. 19
offers, finally the 20th gets approved.
I have an address, I don't have it. Yeah, exactly. Right, all those things. And that could take 30 days, 2 weeks, 6 months, 9 months. How do you keep your borrowers engaged throughout that? Because, here's the old sales thing, right? Time kills all deals. Right? The longer it sits out there, the longer you're opening yourself up to risk. So how do you bridge that gap? How do you keep them engaged? Data definitely helps. Experience definitely helps. Just overall and it's a balance of just not even just using technology, but how do you balance it with technology versus that white glove kind of treatment? You know what I mean? I'm going to give Michael Hammond a
concierge service.
That's right.
Use the data so it's hyper personalized, not just you're blasting out to everybody, hey, now's the time to refi. Well, if I can say, hey, Eric, I see that you're in a subdivision in Florida, and I see all of your neighbors have a pool and you guys don't have one yet, but you have this much equity in your home. Did you ever think of doing a cash out refi to do the, put in that pool that you've always dreamed of? Well, that's highly personalized to that individual borrower. They're going to be much more receptive to that than some generic, did you ever think about refining?
That's right. I don't want to get into the dealer conversation here in the automotive industry, so we'll set aside. But I'll use an example of that, right? Is one of my neighbors, he works at a car dealership, and one of the things that he does is he monitors his customers' kind of lease timing. And then as he does these kind of trickle campaigns, to his kind of renewals that come up and say, hey, look, hey, thanks for leasing the car, whatever the conversation is. How's it going? Do you still like it? Blah, 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 blah. Oh, by the way, now because he's had those multiple touch points, right? It goes on 2 years, 3 years, whatever it is. Now they're like, oh yeah, I'll just go back to him because he kind of was asking me how it was and all these types of things. I mean, it didn't take a whole lot, but some of it was automated. He uses some of the tools that are automated to go out there and do it. And then when it comes time to the actual renewal, lo and behold, he gets 75% of them come back to him, right? I mean, a similar type theory. And there's a guy that goes on LinkedIn quite a bit and talks about this as in his broker community. I won't mention any names, but he's right. He's about if you're selling experience and you're taking your customers first, 9 times out of 10, you're going to win. And you use the data to make sure those touch points are relevant.
Exactly. And you can use automation. I think the most critical term I hear from all of that is consistency. Mm-hmm. If you are consistently in front of your borrower, if you're a vendor and you're consistently in front of the lenders and the mortgage companies, you're going to have a much better chance of winning their business when the timing is right for them to pull the trigger. Mm-hmm. Out of sight, out of mind, you know what I mean? And think about it, how many lenders sell off their servicing rights so that monthly statement I'm getting in the mail isn't even coming from the person I got the mortgage from.
That's right.
So that's a key touch point that is eliminated from the borrower or from the mortgage company, that if you don't have a methodology to reach out to them, and sometimes it's a phone call, sometimes it's a text, maybe it's a video, I think all of those things are critical to really staying top of mind. Eric, you and I could talk tech forever.
We can do this all day long. I know.
So tell me, any other key takeaways with, the ICE conference, or what's on the horizon for the next events? Because you guys do it first rate. I got to mark my calendar. Give me some updates on that standpoint.
Yeah, next year it's a little earlier. It's that last week in February, first week in March. So I don't have the dates in front of me. I should have had those. That's a poor. Hopefully Jonas isn't watching this too closely.
All right, last week of February, early March. Same place?
Same place. Win Las Vegas. And, I wouldn't be surprised. We're going to, I'm fairly confident we're going to expand it. And by that, I mean, we're going to have, some MERS folks there, some Simplify with the entitlement and settlement community there. If I had to bet, we're already starting to talk about it. And then how do we just kind of just broaden the event and just make it even more impactful for the industry? So I think everyone was, again, we kind of went into it a little bit nervous. We weren't sure. COVID was still pretty hot early part of the year. And
right.
We were kind of the first, big conference coming out of what we were hoping was the end of kind of this COVID spike. And luckily, fingers crossed, and the winds kind of blew our way, and it worked out well. So that was good. And we got a great turnout. I think 2,700 people, something like that. We were kind of going into it thinking maybe 1,000, just because of the conditions, not because it was a bad event. We were just worried about kind of the conditions of it. And we were pleasantly surprised. And like you said, the content was really good. The marketing team, the product marketing team, the events team, the growth team, they did just a fantastic job kind of putting it together. I mean, we really kind of put our heads down, tried to figure out what's going to make sense and how to align some of these sessions together and some of the content. The team did great keynotes. I mean, unfortunately, I missed most of them because I was running around setting up for the sessions afterwards, but got great feedback on those. So you'll see more headliners next year as well. And, we had an executive summit. The first time we've ever done it before. It was Sunday and Monday prior to the major experience event. And that went really well, so we're probably going to expand that next year as well. So lots of big plans. We got a lot to do. We'll probably start planning here in the next month or so for next year, and but a lot of really good content, and like I said, kind of expansion of these things as well, which is cool.
Well, and for those of you who are listening, if you have not gone to an ICE conference, you definitely need to circle your calendars now, start planning for it. If you have to go to your bosses and get budget approval, now's the time to start getting it on the calendar. And just for industry impact, I think one of the statistics that Joe shared that just blew my mind was 100% of the data inside a mortgage transaction, of all the mortgage transactions that take place in the U.S., touch some aspect of ICE technology.
That's right. It's amazing, isn't it?
Incredible.
I know. With the addition of MERS and simplifying that equation, that rounds it out. It's amazing. It absolutely is just amazing.
So you guys are a force to be reckoned with. You're doing great things. You're giving back to the industry. You had some charitable things going on, a lot of great stuff. Eric, if anyone wants to talk to you further, whether it's about the conference or just your insights, what's the best way they can get a hold of you?
Oh, email's great. It's eric.kujala@ice.com. It's pretty easy. So,
and you can always find them on LinkedIn.
Yeah. LinkedIn as well. Yeah, I'm not as savvy as everybody else is, but I'm on there quite a bit. I definitely try to be on there quite a bit.
Well, Eric, your insights are always greatly appreciated. Thank you so much for being a guest on this episode of the Fintech Hunting Podcast.
I appreciate it, Michael. Thanks a lot.